Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 16th day of December 2014, and this is the daily report for gold and silver. And what a crazy day we have seen in the markets, with substantial gains in gold towards the beginning of the day, only to give it up. In terms of the range, and this is what's most interesting, 1224.60 on the high, the low 1187, so quite a range when you consider we're looking at over a $30 range. Ended up at this point being up about $2.5 at, call it 1196 and change. Absolutely a crazy day within the market. Silver continues under pressure, off about 44 cents, almost 3% on the day, below 16.1573 current print, low of 48, high 16.75. So you can see that also had a tremendous range. We'll talk about some of the reasons we had this crazy volatility in the market, as well as update you on where we think this market's going and what this most recent move is telling us, if anything, all on today's daily report. So we have a couple of factors at play in the market. We're looking at a daily chart. Considering that the Dow Jones Industrial Average was up about 240 points, closes down 100 points, is pretty significant. It's all about the price of oil, according to many analysts. I believe that is part of the picture. The other part of the picture is the sensitivity or volatility that we're getting as we go into the holiday seasons. Now, when we look at this daily chart, the one thing that stands out is the fact that we had this tremendous range. When you consider this is that high, which puts it up substantially on the day, about $30, $25 on the day. The low kind of matching with a 50% retracement, very, very short-term retracement. It's simply looking at the move from 1240, these recent highs, and then it is, of course, starting down here at 1130, which is the most recent low from here. So we're only measuring this particular rally here, and the fact is we've now seen approximately a 50% retracement of the short-term rally. So that's interesting. But what's more interesting, I believe, has really been the range that we have seen in the marketplace in this extreme volatility, where we had it up tremendously, only to close up about $2 on the day. Now, you can really see the effect in the Standard & Poor's. This, of course, is the E-mini that we're looking at. But look at the range on this one candle. This is a half-a-day candle. You consider the high probably 2010, right around there. Currently trading near the low, which is 1963. Consider the amount of points in terms of where it has been oscillating between. You get this tremendous range also in the Dow Jones Industrial. We had the VIX, which is the volatility index. That moved up tremendously too. One of the reasons that we have been sidelined is because of my sense that we could possibly see a real kind of wild gyration or increased volatility, which makes it almost difficult to extremely hard to trade that type of market. And so I believe that especially being sidelined right in here, especially on days like today, really makes a lot of sense. Now, in terms of really getting a sense for how this market moved today, I'm pulling up a very short-term chart, 230 minutes. What you see is when we look at the activity pretty much in the center of the day right here, this period right here, look at the extreme highs and lows on these two candles, this green candle here and this red candle here. As a matter of fact, let's kind of separate them a little bit so that we get a better sense or feel. You don't see it as well, obviously, but when you separate it, you can see the tremendous range we had here, moving up to about 24, this being the high of the day, low of the day, and we're closing, as I said, about $2 higher on the day. Certainly not like silver, but let's take a look at the longer term charts to see if we can get any sense of really what this market is doing. And we're looking at a weekly chart. This, of course, is continuous contract COMEX gold. And I think the most important thing that we have to take into account right now is the fact that when we create this long-standing resistance line, and this is created from a series of tops as the market moved down, as long as we're staying under this line, my sense is we are going to move lower. We talked about this a little bit yesterday, but I believe the key area, and it's not a price point, it's really an area, because you can absolutely see we had a low of 1131. So if I'm saying 1157, we're talking about a few dollars away from that. But within this area, any kind of really strong break is going to signal a real breakdown in the market. The fact is that there's been no concrete technical evidence that we have a real rally in play, and the essence of the technical information as we get it is really that this last $100 rally was merely a counter trend to the absolutely prevalent bearish trend that has been in the market. If we would have seen any kind of indication that we had a real rally, we would have broken above this particular price point, and in fact, we did not. So with that in mind, when we look at this 3-day chart, we have a similar sort of retracement line that's coming in here. And what that tells me is that there's a distinct possibility that this fifth wave here absolutely is not concluded. We would know because we would get a breakdown. The breakdown would have to come in, this being below the lows that were most recent at 1180, but above this 1130 right in this area. But we'd have to have a pretty substantial break below that, about $60 from here. So with the light trading as we go into the holidays, my sense is still that we're probably going to see some downside pressure. The one thing that we cannot account for is this extreme volatility which has come into the market. That being said, we are still sidelined, and I believe that that is the best and most proper action for us to take at this point. Silver continued to break down today, breaking below $16. We've talked about different areas of real support in the market, 14 being a pretty critical area. And the area that we're at right now, we had 16. Let's go ahead and blow this chart now that you have a sense. But you can see that we have really blown below this real level right now that I believe now is going to be resistance just above 1600. Really major support doesn't really come into the market till about 1450. We kind of have this void short term in the market, except for this one. This is a real print and a real tick. That one extremely volatile day that happened on the Monday following Thanksgiving. You can see that right at the beginning of December, or just before that, excuse me, that Monday that came in right at the beginning. I believe that's the 1st of December, excuse me, but right after the Thanksgiving 4-day weekend. This actual candle is a real candle. It's not a misprint. In many instances, you would look at this kind of a range and go, there's some sort of a data glitch there. That is not the case. So real support in terms of silver doesn't come in till around 1450. If we see continued pressure in the equities markets, that industrial component of silver is kind of stepping in, and we're seeing that under pressure. We saw platinum trading dramatically lower, although it only closed off $4, as well as palladium trading lower on the day. We are sidelined. I believe that is our best bet right now. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.